The top lending options for new property investors. Financing explained, or at least the top 3 lending options that I continuously get DMs about on a regular basis. Because I always get asked about these 3 lending options, I decided, you know what, let's sit down with the camera, we'll put a quick sort of recap, my personal thoughts on each of those 3 lending options and pop it in this quick video for you guys. So if you're wanting to get into property investing, things with property, buy to let or anything like that with your own cash, you're going to want to watch this video and you're going to want to watch till the end as well, because I'm going to tell you about my favourite option and there are some great reasons why it's my favourite as well. And judging by recent events, it's going to be the option that I'm really going to be opting for and wanting to use moving forward. But there'll be more on that in future videos as well. I know from personal experience that property investing can almost be like a roller coaster, especially when it comes to choosing the right lending product for you. And that's even more so if you are new to property or new to investing. I know I felt quite intimidated by it as well, so hence why I'm doing this video. So first up is the traditional buy-to-let mortgage. Think of this almost as the golden retriever of lending options. It's reliable, it's long-term, and it's pretty straightforward. So if you are thinking of doing a vanilla buy-to-let, if it stacks up for you, or whether you're thinking of living in the properties, then a straightforward mortgage is probably going to be the way to go. You can get stable monthly payments. The interest rates, give or take, can be fairly, and I know interest rates aren't what they were maybe 2-3 years ago, but you can get pretty decent interest rates when compared to other higher rate sort of lending options. And that's especially if you have a really good credit score. So if you find yourself a really good mortgage advisor, again, my mortgage advisor's details are in the description box below. You can get some good advice from them, and that usually is a great way to go. However, with a mortgage, again, like I say, you have got to have a really good credit score. So if your credit score isn't the best, you're obviously not going to get the best rates. Also as well, if your strategy is to add value, if you do look and find a property that you want to do this a buy-to-let strategy on and add value to it by fixing it up, for example, if the property isn't in a rentable or livable condition, then the lenders might not lend against it. And so if your strategy is like mine, then this option might not be the best option to start out with straight away, because as I said, if the property isn't a livable property, then 9 times out of 10 the lender will not lend on it. Also, if you're looking at purchasing a property that's got non-standard construction, again, that'll be another reason for the lenders to not lend on that. For example, I did look at a property that I really wanted to bid on and put an offer in on, but however, the property, it had everything else going for it. It was right near a really good park here in Nottingham. It needed fixing up as well, so therefore it needed a bit of TLC doing to it, so there was a chance and an opportunity there to add value and create value within the property. However, it had a flat roof, so with it having a flat roof, then that was going to really narrow down my lending options when I was ready to move on to the buy-to-let option, because that's considered a non-standard construction. And with other things that have happened, I really did not want to take the risk, so actually I didn't put in an offer on that property because of that reason. And in these sort of uncertain economic times as well, that could be a reason for a lender not to lend on property. And by the way, my name's Sabrina and I am documenting my whole property journey here on YouTube. I do have some more videos that go into this in much more detail that are on my channel on the playlist, so check those out and maybe think about subscribing as well if you want to hear more. So another thing with a standard mortgage is that it does require a lot of patience, a lot of time and a lot of paperwork. I think all lending options require that, but it's even more so with a standard mortgage, as most of you will probably know. So it's not the quickest route if you want to sort of jump from situation to situation. It's not the quickest route to go down because it takes so long to set up, especially here in the UK. It's a long process which you do have to go through with the professionals, obviously with your mortgage advisor who will find you a good deal in the first place, with your solicitor who will do all your conveyancing and everything like that for you, and literally help with the transfer of money, the deposit and everything like that. And obviously you've got to also with estate agents and things like that too. So it is a long process. All the lending options are a long process, but it's more so with a mortgage than anything. But on the other side, this is the product that I do like to exit onto, because then you know for that set period of time, whether it be 2 years or 5 years or whatever, if you fixed in, you can fix in on a great or a good rate at the time, and you know you've got that certainty for that period of time you will be paying that each and every month. month. So that, for peace of mind, is a great option. So the mortgage is great for you to exit onto once you've added value, and if you want to keep the property and you're not doing a flip and you want to be a landlord and get that residual monthly rental income. So especially in these uncertain economic times, for example, like what happened last year with Liz Truss, it's good to have that knowledge and that peace of mind that you've got the set monthly payments that you will be making, and that you know that it's not going to go up and down or whatever. You're making those fixed monthly payments. So it can help you budget and things in your own life. So next, let's have a quick chat about bridge loans. So bridge loans are really flexible, and they literally allow you to swing from one financial situation to another. Bridge loans tend to be, they're pretty short term. I mean, I tend to look at either 6 months or 12 months, but they are high interest. But they will allow you to purchase a property quickly. Like I said before, when I say quickly, I mean quicker than a standard mortgage, because they are a little bit more flexible, but they still involve the same process as you would do if you were going for a mortgage. So it still involves getting a solicitor, it still involves getting your mortgage advisor involved to find you the best deal. It still involves all of the paperwork and things like that, but they are genuinely more flexible than a standard mortgage. And they are perfect if you are operating in a more competitive market within the property market, because it allows you to purchase more quicker. So it's perfect if you are operating within a competitive property market, which, let's face it, that's what we're working with now. And the fact that they are a lot more flexible is a great reason why I like to use them, because as I said before, my strategy is to add value. So and with them not being as strict and as stringent as a standard buy-to-let mortgage, it will allow me to purchase a property that might not be in a lettable condition, as we've discussed earlier with mortgages. So you can literally purchase a property that is in not great condition, it's run down or whatever, if there's issues with it, even as we talked about before, if it's got non-standard construction, things like that, you can purchase a property by using a bridge loan and then add the value later, and then ultimately exit from that bridge loan onto a mortgage. Now, the great thing about doing that as well also is that it allows you to test the market. So it gives you time to, whilst you're doing up the property, once you make that initial purchase of that on the bridge loan, it then allows you to sort of test the market and see the rates, and while you're actually running the project, to then get the best rates for a buy-to-let mortgage at the property's new sort of higher value price later on. But it allows you to test the market in that sense and then get a rate that is great for that market. And I'll explain that point a little bit more when I go on to the next lending option, which, as I said before, is my favourite option. So that may or may not be clear, but once we go on to the next option, I will go into more detail on that. Let's have a look at some of the downsides. So some of the downsides with it is really pricey. You do not enter into a bridge loan with a faint heart. You need to know your exit strategy and know where you're going to be going after you come from this loan amount, because if you go over the date that you've agreed to pay the loan off by, you can be hit by some really, really high charges. So you need to make sure that you know your exit strategy inside and outside, that you've had expert advice, you've gone to your mortgage advisor, you've already warmed them up, they're already looking for rates well in advance of when you need to have paid this loan off by. You've got all the advice that you need from that. You've looked at it from every single angle, and you've got some sort of risk register in place, or you've got some sort of risk strategy in place. So if you've looked at everything that could go wrong, and you've got a plan for each and every thing that you think that could have gone wrong with it. So yeah, it's not for the faint-hearted at all. Yeah, they can be really pricey, guys, and with the fees and things that you need to pay back, it needs to be paid off fairly quickly. A bridge is literally what it says. It's there to bridge the gap for you to jump onto and then jump off through via a different exit strategy. So it's a really, really quick way of getting the funding together to purchase a property, but you need to get off it really quickly. They are designed to be paid back really quickly. So yeah, make sure you seek expert advice before you go onto a bridge loan. You know, you've covered every angle as to if anything does go wrong or what could go wrong. You've covered every angle and you're prepared for that. And make sure you give yourself enough time to do the actual project and enough time to exit off it as well. So what I tend to do is I always like to factor in for a longer time than what I think's actually needed. So what I'll do is I'll look through, and when I'm preparing at the very beginning, when I'm looking at a property to purchase, I make sure that I've planned the actual project out. out. So I've got a project plan, and again, you can get the template for this, guys. It's in the description box below. I know what it's going to take to refurbish the property, and more importantly, how long it's going to take, and then I add on time as a contingency as well. So for example, if I think it's going to take me 6 months, I will add a little bit on and probably go for the 12 months, so that I've got that bit of cushioning to get to move on and exit the bridge loan. And doing that, it might add to your costs, but that is a cost that I'm willing to take, because the alternative, if you run out of time and you run over, is a lot worse, because you will get a lot of a higher fee, so it will end up costing you more in the long run. So make sure that you factor in your time for when you're going to be doing the project, and it's a realistic scope of works. You realistically know exactly what you're going to be doing to add value, refurbish, modernise, or whatever the plan is with the property, and you give yourself that extra amount of time so that you're not under the gun the whole time when you're doing the project, especially when you're starting out, guys. And guys, if you want to get a bit more professional advice on bridge loans, you can always use Unbiased. The link is in the description box below. You can get your first consultation free of charge, and they will literally match you up with either a mortgage advisor, a financial advisor, or whatever you need regarding your finances. So that's Unbiased. The link is in the description box below. And for everyone who does sign up, I do make a small commission. And the last option that I'm going to just quickly go over in today's video is a bridge to let. And this is by far my favorite lending option, because it's almost like a mix and match of both worlds. It's almost like a love child between a bridge loan and a mortgage, because you have the speed and flexibility of a bridge loan, which is going to enable you to move fast still, but you also have the certainty of a mortgage with the rates and everything that you're going to be exiting onto. So you have that exit plan built in from the beginning, and that is why I love that, especially with what's happening at the minute. It's that certainty. So for the first project that I've popped on here, that's the Woollerton flat, I actually used a bridge to let, and looking back on that, it was the best thing I could have done, because when I first looked at this property, it was really competitive. I bidded on the property, or put in an offer on the property, and at first it was rejected. Then that sale fell through, so then the estate agent called me back, so I had to move really quickly. So it allowed me to quickly get the funds together so that I could have that initial bridge loan. And also the property was trash, guys. If you have a look back on the playlist of us fixing it up, the property was in a dire need. It wasn't in a livable condition, so it was the best thing getting the bridge loan for that initial purchase. However, the only downside was that I was a little bit under the gun trying to do the property up. So this is why I always say give yourself enough time to actually do the initial project. However, I would take that pressure any day. That is better than what is happening at the minute. Once obviously we'd done the project, so that was the first phase, was that initial bridge loan, getting that, and then doing the project up, and then there was a date that we agreed that I would get the project completed by, and then we would go on to the second stage, which would be the buy-to-let portion. And when I tell you, the transition was so much more simple than what I'm having to do at the minute. I don't think I appreciated it at the time, but it was such a smooth transition. I had that certainty that bam, right, I'm going on to this rate, and it went through, and you've got that certainty of knowing that you've got that buy-to-let portion for the next 5 years, that you've got that rate locked in. And it was during the time of Liz Truss, when she came into power, and things went bottom up with market certainty. Like, you guys all know that what it was like then. It was just up and down, up and down. We're still seeing that now. It's still not sort of settled, I don't personally think, at the minute. But knowing and having that certainty that you were going straight onto that buy-to-let was brilliant. I've got a playlist showing the good, the bad, and the ugly from bridge to let, so you'll see it goes into a lot more detail of the advantages and disadvantages of what I'm going on this video. And as I said earlier on in the video, the other thing with it, the other downside would be that I wasn't able to sort of test the market with the buy-to-let rates when I went straight onto that buy-to-let portion. But to be honest with you, that was a good thing, because at the time the interest rates just went crazy, didn't they, for anything. They just went mad at that time. So it was a good thing knowing that I had that rate locked in, because it was already pre-agreed. The only other thing as well is that it's the amount of fees that you've got to pay. I mean, you've got to pay fees when you're going through this process in the UK anyway, but it was almost like paying twice. So you had to have independent legal advice. I had to have obviously the standard sort of solicitor's fees and everything with that as well. And also I'm purchasing in a company name as well, so there was also fees in association with that as well. But again, I'll go into more detail in a dedicated video that I've done. I'll link that as well for you to watch. So yeah, thanks for watching, guys. I'll see you in the next one.